Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 5:30 in New York. It is Tuesday, April 16th, 2019, and this is the Daily Report for Gold and Silver. Gold continues its steep decline in terms of pricing, selling off today by almost a full percentage point. Talk of another sale of Venezuela gold, along with a risk on market sentiment due to a bullish U.S. equities markets, have all been contributing factors. Let's take a look at our current pricing. Gold is currently down $11.80 and trading at $12.7950. Of course, we are flat with no active trades in gold or silver. Speaking about silver, silver also trading lower, but very, very fractionally lower, $14.95 and a half, putting it down about 2 cents. Platinum also trading lower, also trading off by about a full percentage point at $885.70. And palladium giving up about $3, which is a 0.2% decline at $13.31, and that's all within some headwinds provided by a stronger U.S. dollar, up fractionally about 0.2% at 96.73. Let's take a look at our technical studies. So traders, a continuation of selling pressure that really began Thursday of last week. That is when we saw the market drop about $20 in a single day. That is this long red candle here. Then on Friday, we had that inside trading day, this doji kind of candle that did trade above 1291.60, the 0.38% retracement level that I believe to be a pretty critical level. But that all changed yesterday when we had lows that breached that, and although it closed right at that price point, it was significant in that when we look at our support trend line, and I'm going to put that in black here, and it is simply created from this low here as well as this low here. We had a defined break below that point, at least on an intraday basis. Now, today, what's interesting is that the market opened at that price point and closed definitively lower. If you recall from yesterday's show, we talked about the fact that any kind of a hard break at this price point, meaning the 90-91 area, would mean that the next real logical step to look for is the 0.38% retracement. That comes in at 1276.90. The market is at 1279.50. However, the low is at 1275.50. So you can see that it dips slightly at this point and then close just at it. And so here is the question that I pose. This is a very critical point for two reasons. One, it's a strong Fibonacci retracement level that we do need to watch in terms of a retracement. 38% is an adequate retracement. However, and this is what we really need to watch out for, if the market breaks and closes below this price point on a logical and technical level, the next real strong support level doesn't come in till about 1250 or a little bit above it, which is based on this top, which comes in at approximately 1255. So we could certainly see more selling pressure come into the market, or a continuation of that, or we could see that this particular price point serves as an area of support. And we're not going to know that unless we see the market either A, definitively bounce off of it, meaning we start to get a series of bullish days in which this becomes our baseline here at 76, and then we see over the next couple of days that market tracking higher. Or if we do get a strong break over the next 2 days below this price point, as I said, there really isn't any technical support in this particular price point, and we can illustrate that simply by taking a look at these levels here that I've highlighted in green. But there really isn't any real level that comes in until this top here, and then the 0.50% retracement at 1248. Traders, therefore, we are currently flat and will remain flat. On a hard break below this particular price point, we will probably initiate a short position with our target between 1250 and 1255. If we see that it supports and bounces off of this area, then we could have a good buy opportunity. But for right now, the most important thing to realize is that we are at a critical point junction in gold pricing, and depending on how it reacts over the next couple of days will give us the information necessary to determine where gold is headed short term. And traders, we're looking at a daily candlestick chart of palladium. Palladium down, but only by about $3. The ones that got hit in terms of percentage moves down were platinum and gold today. And palladium, as you can see, has closed right at this 100-day moving average. It's pretty much an identical move. So I'm really curious to see if it does break below the 100-day moving average. If so, the next real target has got to be this level right here at 88. And below that could be substantially lower, because you would look at these series of tops that come in right here, and they come in roughly at $1,200, which traders is about $130 away from current pricing. So a hard break below this price point, meaning $1,288, would signal the potential for another decline of about $88. And traders, lastly, I do want to take a quick look of platinum. Platinum down $8.80, $8.85, under pressure once again. But here's what I'm finding interesting. Take a look at this particular top here, as well as this particular top here. This one occurred mid-February. This one occurred at the beginning of November of last year. We draw a line straight across. And what we'll see is that the low today comes in and matches that precisely, these two tops. And so on a technical basis, we could certainly see platinum find support based on these two prior tops and move higher. A break below this price point, however, signals that we are probably moving to approximately $858. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.